In today's video, we're going to take a look at sectors. We'll be using our utility label sectors indicator on the daily chart. My goal is to find which of these three sectors we should be looking at for bullish activity, whether it's XLU, XLV, or XLK, and if there's any clear-cut signs for bearish leaders. Let's start with the bulls first, and we're going to start the conversation with XLK. XLK looks the least interesting to me because we've hit our 1618 extension. It feels unlikely that we'll continue to keep rallying beyond this, at least out of the sectors we have, so I would be ruling out technology. Now next up, we have XLV. So if we come into XLV and we take a look at what XLV is doing here, the charts look much better. It feels like we've bounced from support, we're having our first pullback. If we could get a slightly deeper pullback, somewhere in the 140 to 138 zone, I would like XLV a heck of a lot more than XLK, which feels extended. Next up, we go to XLU. XLU we talked about earlier in this pullback. That's when we had set up the trade, thinking that this might be the best sector that we had into Q4 of this year. And so far, XLU has not disappointed. It's led to a really nice rally from where we built up our trade, and it feels like the very clear leader, but a little too late to enter in terms of a pullback. So out of our three sectors that are currently hinting to us that we have a market stage of acceleration, to me, it's XLV that stands out of those three. Now next up, we have our bear sectors. We have XLF, XLP, XLB, and XLRE. If we start the conversation with XLF, and I'm going to load in our market pulse indicator, XLF looks compelling because of this recent market pulse shift. Our market pulse just recently transitioned to this bearish stage, and that to me tells us that this trend is still fresh, still new. Any pullbacks to this 53.16 would make for nice short side zones. However, we have noticed, like before, that if this is just a slow interim sort of chop, then you'll see that very quickly, and the stop should be maybe something like a close above the market pulse line. Now, waiting for it to turn green, as we found that oftentimes is a little too late for the bearish switch. So XLF looks very interesting for a short side trade. XLP looks like it's already gone on for some time, and if anything, it feels like we're building a bit of a base that we might bounce from. So XLP would be ruled out for a short side entry. Next up, we have XLB, similar to XLF, just recently went bearish, and I like the fact that inside of this red candle, we're pulling back. If we get an opportunity near 89.62, that would be ideal, but even then, I think somewhere a short around 89 stop above this red candle might be an interesting trade looking for a move to 87. That's a risk of maybe 50 cents to try and make $2. Makes a lot of sense from a trade. Finally, we have XLRE, and if we take a look at XLRE feels to me like we're headed into some sort of previous support. We've bounced every single time we've fallen into this zone. Sure, we might break below it, but I think you have some slightly better short side opportunities with XLF and XLB. So one more time to recap, we started with just using this very simple utility labels indicator. We're trying to build a bias with what the market's giving us. There, with the long side market sectors, we ruled out XLK as a result of being too extended, ruled out XLU, already in it, much nicer entry from before. XLV is the only open sector left. From our bearish sides, we have XLF, which looked nice, and we had XLB, which looked nice. Take your pick between the two, both look like good, decent short side setups. In terms of specific triggers, I think you could roll into something like the 2-minute time frame chart, layer on the hourly volatility box models, and trade breaches in the direction of the overall bias. Take care, everyone. Good luck trading, and I'll see you in our next update.